Hey everybody, welcome to the morning market briefing. It's Monday, March 9th, 2026. Hope you're doing well out there. Ben, Tom, how's the weekend?
It was rainy.
Very rainy.
Continues to rain as well.
Yep.
Yeah, personally, it was a great weekend.
Well,
Ooh.
must be nice.
The
Someone's kids aren't old enough to move around in a rainy house.
Yeah. Rainy house plus the time change combo is tough
Ooh,
when
that's
you have
brutal.
young
Yeah.
children.
Long Sunday.
I mean, it was like 10 o'clock at night. I'm like, please go to bed. I know it feels like 8:30, but it's actually not.
Yep. Lots to talk about. We're going to open with the obvious story, perhaps, the war. Not a great weekend in terms of, I don't know if people were looking for resolution, but certainly hoping to trend towards a little bit of cooling, and does not seem that is the case, at least as of now, Ben.
yeah, I mean, even if it's not cooling on the war front, you'd like it to cool a little bit on the market front, and we're just not seeing that. The Strait of Hormuz remains effectively closed. Secretary Wright was
They got a ship through.
yeah he was asked by Jake Tapper on CNN about it, and he was like, well, just 24 hours ago we had a ship go through. It's like usually there's 60 to 100 ships going through a day, and like so much so that right now Saudi Arabia is cutting its production because there's nowhere to put the oil.
To go.
Like they're like everything's full, like all their tanks are full. They can't unload it anywhere, and so that it's a mess.
We need to start building some bridges.
Yeah.
Mhm.
Big, beautiful bridges moving petroleum. That'd be fun.
Bridge to Terabithia.
Yeah.
All-time sad book.
Yeah. Curious your thoughts. This is not in the agenda, but Chris Wright, what do we think? Good, bad, indifferent?
I mean, I think the ball was kind of taken out of his hands.
Yeah, I feel I feel my general view is I feel like there's an awful lot of Twitter and X criticism of the guy for like everything he says, and lost in it is, I mean, the guy's kind of just along for the ride with this whole thing.
I think
I don't know what we should want him to be doing.
I think that a lot of the things that we would have wanted to happen would have happened before. Like once you're in this conflict, like there's not really a ton that you can do. But clearly the United States was not prepared. I mean, for this.
The reserves were quite low.
Yeah, we're, I think, 50%, 60%, I think, of the total strategic petroleum reserve. For context, we had a peak of, I think, 700 million barrels under Obama, actually, in 2010, 727 million. And then it's gradually declined. When Trump refilled it in 2020, he always talks about kind of topping up and buying so much oil and refilling the SPR. He took it from 636 to 656. And yeah, he did it quickly, but that was his
Not a huge move.
yeah, massive refill of the SPR. But now it's 415. And so we don't have nearly as much oil in the strategic petroleum reserve that even we had a couple years ago. And to me, and we talk about two-way a lot, and Mark Halperin did make a good point, and I think it's well taken, that I don't know if the United States was prepared for a big conflict with Iran, even just based on the fact that the SPR wasn't full.
Yep.
Or even being refilled aggressively. I mean, it wasn't even being refilled aggressively, and now we're paying the price at the pump, and that's going to require the Republicans, assuming nothing changes, which it probably will, they'll pay the price at the midterms. And that's what the polls are saying.
In Iran, we've got a new supreme leader with a familiar name. So he has come in. Clearly, the administration is not pleased with that selection by the Board of Geniuses?
The Assembly of Experts.
Assembly of Experts. We're the Board of Geniuses. The Assembly of Experts, Trump not going to like that. I would add in there that guy's had pretty much everyone in his family killed, so he's probably not going to come in more level-headed than his father. Just going to throw that out there.
Yeah, I mean, I think you combine that with Strait of Hormuz, and it's like this is another development that they did not want to happen over the weekend.
And even Lindsey Graham coming out saying, "Hey, let's take some care here in what we're doing," which
Please
is
be
interesting.
cautious.
Please be cautious about what targets you select. So concerns about specifically the oil infrastructure.
I mean, they were saying that it was raining oil in Tehran after a couple of precise strikes over the weekend, which is probably not good for the environment. I'm surprised that people aren't up in arms about that.
It was the first time I've seen acid rain in the headlines since like 2005.
Yeah.
Oh, man, 1995.
Yeah, 95 was acid rain was hot.
Acid rain was
Captain Plain was all over it.
It was the first climate hoax was acid rain, followed by the hole in the ozone layer somewhere by New Zealand.
Yeah.
Remember they used to show you pictures of sheep with like radiation burns? What happened to those guys? But this is if those things are true, raining oil over Tehran probably the kind of thing that would get those things kick-started, if I had to guess.
No fresh water either. I mean, the U.S. and Israel are bombing Iranian desalination plants. Iran is bombing Bahrain desalination plants. Like, newsflash, there's not a lot of fresh water in these parts.
Yeah.
Like, this is how they get their fresh water. They build these incredibly expensive desalination plants and use seawater. So what happens when you don't have any desalination?
Well, I've seen the movie Waterworld, and I think what you have to do is drink your own seawater, if you will.
It may be coming. Meanwhile, Trump kind of getting closer and alluding to, hey, we may have to get more boots on the ground. Says they haven't been able to get to some of the uranium stockpiles, at least not yet. Not ready to send people in yet, but seems like we are trending that way, much more so than we were a week ago.
Mm-hmm. I mean, NBC reporting that Trump is leaning that way. I'm not a fan.
No. From the market implication standpoint, oil spiked, was up, 30%?
Yeah. I mean, it was the biggest move since COVID, and that was because oil was literally negative.
Yeah.
So the percentages don't really matter when oil is $1.
Yeah, it's definitely out there. Yeah, people forget what it was the biggest move, but that move was at the downside.
To be a 30% move higher means like people are scrambling massively to get oil, and they just don't have it. And
I mean, it's going to go back to 2007, 2008. I mean, I can remember
the shortages.
Yeah. I remember one time driving by a gas station, and then I was going to buy a new racquetball racket, as you do, big racquetball time in my life. And then on the way back, the gas station just being closed because there just was no gas. And I went up to Bear Parkway, came back off of whatever that road is over there by California Dreamin'. I can't think of what it's called. And it was just like there's a BP, and like Chastain. I don't think it ever Chastain. There was a BP on the right hand side if you're headed back towards Roswell, and they were just never reopened.
And that was it.
That was it. That was the end of that gas station.
Lights out. And we've seen a little bit of a rebound. I mean, I guess on a percentage basis, a sizable rebound.
Down 18%, but still up 12% on the day.
Yeah,
but
still a big move.
So it's the G7. The story there is that the G7 countries are looking at releasing reserves, which, again, so lion's share of this would be from the United States. So the G7 consists of the U.S., a decent amount of oil, 450 million barrels in strategic petroleum reserve. The U.K., who really wants to get away from oil. Japan probably has some oil. Italy probably doesn't have much oil. Germany probably
perhaps olive oil.
France was the one who called it, so that they don't have oil. And Canada, so that's who would be releasing the oil. It's not like Saudi Arabia.
Did you see the interview with Mark Carney where he was like, "They didn't call me about the Iran thing," and he's like, "No one really calls us anymore." Basically, like people realize suddenly that Canada has no impact on the greater world, and they just don't care about that guy anymore.
That's tough. It's a tough spot to be in as a quote-unquote world leader.
So this would add about 300 to 400 million barrels, about 3 to 4 days of global oil supply if they released all of this.
Big relief.
And that would take 30% of what remains of the reserves out. So I mean, what we talked about on Friday, in that there aren't that many bullets on the oil side, seem like that's true. Yeah. Besant came out with that announcement saying, hey, we're going to have a series of announcements. The announcements amounted to Russia can sell to India, and we're going to release 3 days of oil supply.
Yeah.
Did Canada peak when we were having to actively cover the fact that their version of their head central banker, a man named Tiffany, was having talks with Jay Powell? That had to be the peak history for Canada, because we haven't talked about Canada doing anything in a long time. But most Canadian thing of all time is having a
sweet king named Tiffany.
Yeah. The most powerful man in Canada is named Tiffany. It's almost 2 on the nose.
What are we seeing in bond world, Tom?
Yeah, but we've seen a similar move in bonds over the weekend. We saw a 10-year sell-off, 30-year sell-off, but they've kind of rebounded. We're about like 417 right now after going a little bit over 420. But I think we're a little oversold here, but it kind of remains to be seen. There's a lot more uncertainty. It's a tough combination where not only do you have the problems with what's going to happen with the war in Iran, but also the potential for spiraling inflation as a result of massive increases, sudden increases in oil prices. And so, I mean, honestly, bonds have been quite muted, I think. And I'm hesitant to say, hey, we should just rapidly continue to attack duration, except for in those portfolios that are deficient, because things were still cheaper earlier and there is so much more volatility. But, we're going to look opportunistically. That being said, my worry that we didn't have enough duration a few weeks ago is now turned into a positive for us, because we do have a much shorter duration than the market on average. And so, we're in good shape. So the long bonds we bought are up, and the short bonds we have purchased as well are just rolling off. And so that's a good combination.
What I'd also add to that is, although you've seen some sell-off on the 10-year and you've seen a massive spike in implied inflation, especially on the 1-year basis, you've seen 1-year TIPS implied inflation go from 3.4 to 4.5, which is remarkable in like 2 weeks. So that's the market's telling you inflation is ripping in real time. At the same time, longer or medium-term inflation, the 5-year forwards, hasn't really done anything. It's 2.15% right now. So,
and we'll get New York Fed 1-year inflation expectations today, and I worry that that's going to be more elevated than reality, and that's going to be a problem for at least the short end bonds. But like, again, we bought all those 3 years ago at 5%. We haven't been really buying a ton of short bonds recently, and it's not private credit. So I don't know if you guys were watching Jeffrey Gumlock over the weekend, but he was going hard at the private credit bros. I'm just going to pull up some of these tweets, but he says, "I've never in my entire life had a problem selling a well-performing asset." And then he followed that up with, "Tired of risks you didn't know you were taking, and no transparency, and no regulation, and no liquidity, and no faith in the reported NAV? Come home to DoubleLine," which is his bond firm where they have massive bond mutual funds.
Home.
But I mean, that's, this is what we've been saying for 2 years now. It's very funny, because that's the thing is, like, if these things are so good, they'd be able to sell them. But in my experience, the cleanest bonds are the ones that sell the easiest. And he's absolutely spot on that.
Well, the difficulty is liquidity. And I wrote this in the market memo on Friday, but liquidity just vanishes right when you need it.
Yep.
So if you're in any product that says illiquidity is a feature, not a bug, which I've heard so many times.
Baseball cards.
When you want to sell it, you're not going to be able to.
Mm-hmm.
I mean, there was an article that went out over the weekend that a Tom Brady rookie sold for $1.2 million. And that's the first football card in 2 years to sell for more than $1 million, because we've been in such a bear market. So,
but it's positive.
That's true. Yeah. Well, listen, I think early cycle, a lot of people are saying.
Yeah. Yeah. We're
early cycle Tom Brady cards. I'm
ready for it to ramp. Equity's down a little bit less than 1%. They were down more. Things cooling. Through Friday, I do want to just kind of recontextualize everything for people out there, because certainly in conversations I had Friday and over the weekend with clients and just people out and about, the S&P's down about 1.5% for the year. As often is the case, when there's periods of volatility, the sentiment, not even the sentiment of the economy, but the sentiment of the market is much darker. I think most people are actually pleasantly surprised that U.S. stocks are down 1.5%. They think it's more, and there's still plenty of safe havens out there. Bitcoin's only down 22% for the year. So, just think about that. If you're worried about the volatility and you need something that's uncorrelated, that's still out there.
Yeah, it's uncorrelated to everything.
That's an excellent point, Andrew. And when you think about Microsoft being down 25%, you told me the market's only down 1.5%. With Microsoft being down 25% and war and Venezuela and Jay Powell not cutting rates and or a totally non-independent Federal Reserve, I would be like, and we're only down 1.5%?
Yeah.
That's remarkable.
Supreme Court rulings. The amount of stuff that's come out this year that is pure volatility to only be down 1.5. Okay.
With the skewness involved with the Mag 7, Microsoft being down 25%, that's the market. Microsoft's what, 6.5% of the market being down 25%, and we're still only down, barely 1% for the year.
Yeah, and
it's like Nvidia's not crushing it. That's another 7-8%. You keep doing that, and suddenly you're like, man, maybe the market's actually doing okay because it's just a handful of huge stocks that are down.
Yeah, and I know. Someone will probably fact check me on the Microsoft stuff and say it was only down 18%, but it was like
still counts.
but the point is, it's really remarkable strength, and I think tonally, I know I probably started off this call pretty bearish, but part of that's there's the frustration of the economy is in a pretty good spot. We're seeing some potential acceleration in areas that we haven't seen improvements for a long time. I think the water behind the dam that was the Federal Reserve was really starting to build, and the dam was maybe about to break in terms of rate cuts. And like I said, with that employment number, and if you had the inflation that we had 2 weeks ago before the war broke out, I think that you're going to be in a really good spot. And I feel like we've just kind of undermined ourselves with this because there's not going to be rate cuts, certainly this month, probably for the next few months. And you've got oil. But what the market is also not telling you is the market's telling you there isn't going to be an economic crash. Stocks are saying that. And bonds are saying we got to be a little bit more concerned about inflation, but we're not going to have a massive hyperinflationary scenario. Otherwise, we'd see bonds at 5%.
The other thing that becomes challenging, because I feel like this call, we have had issues with about a lot of the data. Tonally, whether it's the jobs report, whether it's inflation, whether it's GDP, and what they used as the deflator on that. We've taken issues with it. The other frustrating part for me is now we're getting to a period in which we might have had hesitations on the data or our own interpretations of the data for the last couple months. Now we're getting to a point where the data is going to be borderline useless. As we look ahead, getting small business optimism tomorrow morning, it's like
everything's pre-war.
Who cares what that reading is?
Yeah, February CPI. Does anyone know, will that number move markets at all? It'll move markets if it's hot, but if it was good.
But they're still going to think it's low relative to where it is now. Yeah. Here's a thought that just came to me. And it is completely, I would say, quarter-baked, not even half-baked.
All right. We're preheating.
What if Trump's aggressive push to lower interest rates and his push for moving against Fed independence was actually a third-level thinking move because he wanted the Fed to not want to raise rates and start QEing again? Because if in a normal scenario, they might actually be doing that now, which would lead to spiraling inflation. Because in days past, the market's down, people are feeling, cut rates, start QE, we're going to get this thing pumping, and then we'll have widespread inflation because in combination with draining the SPR, stop me if you heard that one before, we've had a strait this time, not a canal, get fouled up. And what was the result last time? They just printed an absolutely ridiculous amount of money, more than we've ever seen in our life, and we got 9% inflation. But because we've quote-unquote attacked the Fed independence, they're actually so independent now, they're not going to cut rates, and that's actually going to keep inflation from going up. And it was
opposite day.
We're playing 5D chess over here.
What
if he just manipulated their brains into a pretzel to a point where he actually prevented inflation? If you told me Scott Besson was like, here's what we're going to do. We're going to make them think it was their idea to not cut rates.
If you told me it was Besson's idea, I might buy it. Trump, I don't know.
It's like, then we're going to invade Iran. Then they're going to be so aggressive against us to not cut rates.
And
that
China
we
won't be able
inflation.
And China won't be able to get oil.
Yeah. Bingo bongo. We're just out here putting it all together. But that's my quarter-baked thought for the day. But I just had that as you guys were discussing. I was like, what if this is all a massive manipulation? Just,
now the wheels are turning, man.
Chew on that for the next 24 hours.
Yeah, I want to revisit this on the call tomorrow. All right, I need more time to think. We're gonna wrap it up there. Please check out the Jacobs Ladder Group, jacobsladdergroup.org. You can support the organization. You can learn about them. Check out the podcast that we did with them a couple weeks ago. We do have an event coming up on April 1st if you'd like to learn more and even just know what's going on. You don't have to donate. Just
come hang out with the boys, have a free lunch, a couple high fives.
Free
who
lunch.
knows what can happen.
Hicks is giving out hugs. And then we start the very important March Madness Barron Ball tournament for the office, a mini hoop free throw shooting contest that consumes a great deal of our attention for the month. So if we're not totally up to date on the war, it's because we're shooting free throws.
How about this? Not to human traffic or anything, but the first super user who RSVPs to the Jacob's Ladder event gets a hug publicly with Hicks right in the middle of the kitchen.
And a photo to be featured on the YouTube stream.
Ooh, I like that.
Hicks is saying yes. He's like grinning ear to ear.
We're going to change that to the new podcast logo.
I love it. All right. Yeah. Consider it a deal, and we will see at least one of you there. All right. Y'all have a great day.